welcome back to Roxom TV. I'm your host, Jeremy, and today is one of those days where the headlines feel absolutely absurd and very surreal because in the next hour, we are going from macroeconomics to AI geopolitics to Ferraris and also to UFOs. And somehow it all matters. So if you care about Bitcoin, if you care about markets, tech, privacy, and where the world is heading next, you will want to stay with us for this one because we do have a packed show. Let's start with Bitcoin first. Today, we are diving into one of the most important ideas in modern economics that most people have never even heard of, the Cantillon Effect. And once you understand it, you may never look at inflation the same way like before. Like, why does it feel like asset owners keep getting richer while ordinary workers feel like they are running harder just to stay in the same place? Why do stocks and real estate or maybe scarce assets keep exploding while wages struggle to keep up? And this bit is Bitcoin actually the escape hedge from a system designed to reward those closest to the money printer? We will break that all down in depth. Then, staying in Bitcoin, we also have Michael Saylor's MicroStrategy made a major move, but surprisingly, they did not buy more Bitcoin this time. Instead, what they do is that they use $1.5 billion to clean up the balance sheet. Meanwhile, a new challenger is rising, so Strive SATA is accelerating its Bitcoin accumulation machine using yield products, daily dividends, and very aggressive capital engineering. So the real question now is no longer who owns the most Bitcoin, is who can build the most powerful machine to keep buying more. Because if these treasury companies keep absorbing supply, then that Bitcoin supply squeeze becomes very real. Then in crypto, there are some very sad news. The industry lost one of its brightest young builders. Nathan Allman, being the founder and CEO of Ondo Finance, has passed away unexpectedly at just the age of 32 years old. A huge loss for crypto, a huge loss for tokenized finance. Will reflect on his legacy and what this means for Ondo Finance moving forward. Then let's move to geopolitics and tech because the AI war is getting more intense. According to reports, China is restricting overseas travel for top AI engineers, not military officers, not defense scientists, but AI workers. That tells you everything about where this is heading. The AI boom is no longer just a business story, it is very much a geopolitical arms race. So it's about chips, it's about talent, it's about infrastructure, and now apparently freedom of movement. Then a fascinating market story. So Taiwan has officially overtaken India to become the world's fifth largest stock market. And the reason is ultimately because of one company being TSMC. The AI chip boom is reshaping the financial map in real time. And this is a story about semiconductors, but it's really a story about where global money thinks the future is going. Then in the privacy world, this one is honestly very disturbing. So your car, your EV, might know more about you than your phone. Where you sleep, how hard you brake, your daily routines, even potentially deeply personal behavior patterns. And now Apple might be bringing cameras to your airport. Yes, like airport with AI powered cameras for some reason. We'll ask a much bigger question like, are we slowly building a surveillance economy disguised as convenience? Then, if we stay in auto, so being the car, Ferrari has officially launched its first EV car, so first electric Ferrari, and investors absolutely hated it. Like the stock dropped because apparently not everyone wants a silent Ferrari. We'll break down whether luxury EVs can actually preserve iconic brands or if this is like brand dilution in real time. And yes, we need to talk about the weirdest story of the day because the internet has gone full rabbit hole. Claims are spreading online about CIA alien DNA tracking consumer DNA database to look for Nordic, the alien human hybrids. And now there is a viral clip making the rounds showing something truly bizarre. So here with a clip, a volcanic eruption in the Philippines, a meteor-like object appears to crash nearby, and some viewers claim a flying object seemed to emerge from it. Now, obviously, we need to be very clear here. There is zero evidence that this is extraterrestrial. Could be like visual distortion, could be complete internet nonsense, but the footage is going viral. Like, we will look at why people are obsessed with these stories right now, especially as new Pentagon UFO. We cover that on Roxom TV as well. The disclosures like keep feeding speculation because like whether it's real or internet fantasy, it says something fascinating about public trust. So yes, like today's show is a little bit of everything. We have Bitcoin supply squeeze, privacy surveillance, and possibly UFO madness. Of course, only on Roxom TV. Make sure you hit the like button, drop your thoughts in the chat, and let's get started with the first news we have to talk about. And we are going straight to the privacy story, the surveillance story, because it's affecting our lives, like you and me, on a daily life. So, like, your car right now might know more about you than you think, maybe more than your phone. And now your e-bucks might start watching you as well. Because think about it, your car, your EV, knows where you sleep, know where you work, where you go every weekend, how fast you drive, how hard you brake, whether you wear your seatbelt or not. Some cars even track your face, your eye movement, your body weight. So yes, like data that may reveal very personal behavior about you, and as much of that information might be leaving your car while you drive. So this is not science fiction. This is happening right now. And there is a bigger question we have to ask. If our cars are watching us, is our home next? Because what happened here is that Apple might be heading in that exact direction. Like, but first, let's actually stick with the car. What's going on with the EV right now? So there's this report. So back in 2023, Mozilla looked at 25 major car brands, and the results are quite brutal. Every single one failed Mozilla's privacy standards. Like, we are talking about every single one. Mozilla even called cars the worst product category that they could ever refuse. So that is saying a lot. So let's take a look at this clip right now.
Mozilla Foundation, makers of the Firefox browser, call cars a privacy nightmare. They say they're the least secure devices you can buy. A powerful statement given the tech industry's reputation these days.
You know, the data collection potential is only growing, and car companies have gotten away with this for so long. So, you know, is the toothpaste out of the tube? Can we put any of this back in? Or is this just the life that we live now, and our cars aren't a means of independence and privacy anymore? They're a place that we can be spied and surveilled and coerced.
Every one of the 25 brands the group reviewed got a privacy not included rating, making the category as a whole the worst the group has ever evaluated. Nissan's privacy policy is probably the most mind-boggling, creepy, scary, sad, messed up privacy policy we have ever read, the group said in 2023. And we here at Privacy Not Included read a lot of privacy policies. And yet overall, Nissan still fared better than Tesla. Making money off information about you, aka data monetization, has been hyped as a big business, albeit with mixed results.
There's a big divide, right? Companies are focused on collecting more and more data, trying to monetize it, they're failing at it. And what consumers want is exactly the opposite.
Now, you might ask, how bad is it, Jamie? Well, I'm going to give you one real example. So, a driver requested his personal data from LexisNexis, one of America's biggest data brokers. And what came back, it was 130 pages, detailed records of every single trip he and his wife took over 6 months, route, driving habits, patterns, movements, then his insurance premium jumped 21%. And when he asked why, he was reportedly told driving data played a role. And that is wild. Like, imagine buying a car and that car quietly builds a profile that makes life more expensive for you. So, how legal is this? Well, simple answer is that, like, the privacy policy, nobody reads. So, according to Mozilla, 19 out of 25 car brands said they might sell your data. That means automakers, that means data brokers, and insurance companies can legally trade information about your life. And most people have no idea about it, and that's the scary part. Not hacking, not leaks, just normal business as usual. And it's about to go even further because now new safety systems are coming. So there are infrared cameras, biometric sensors, driver monitoring systems, and the official reason that they're giving out is, of course, for safety, like just to detect any drunk drivers on the road, prevent accidents. Like, it sounds really good, but now ask the next question, like what happens to the data? Because now we're talking about behavior data, potentially health-related data, biometric information, and there are still very few clear rules around how that gets used. And we already know, like, our phones track us. So whether you search on Google or downloading apps or shopping or location, like the battle is already happening. But your car, it feels different because your car is real life, whether it's your family trips, school drop-offs, doctor visits, personal routines. That's deeply intimate information. And when that gets monetized, privacy becomes a business model. And not just EV we're talking about. I was teasing it a little bit in the beginning. So Apple is entering the very same area. We are debating like surveillance in our cars, but Apple might be bringing a version of that directly into our homes. So according to Bloomberg, Apple's next AirPods might come with built-in camera. So this is actually not for taking photos or for maybe like POV angles like smart glasses do or Meta glasses do. Like these cameras, they are for AI. The idea is this, like these cameras feed visual information directly into Siri. So Siri doesn't just hear you, it sees what you see. So point your earbuds at the fridge and ask what to cook, or maybe when you walk in the room and ask what you're looking at. And these camera would feed into Siri, hence the AI. So the AIs would get the footage where you are and respond to you like an actual assistant. At least that's sufficient. Like a privacy light will reportedly turn on, like whenever official data is active. That's what they claim. Apple says there will be signals, but still, let's be honest, that is still another camera entering your home, entering your life. So the bigger question we are quite concerned here is that first we have the phone and then the smartwatch and then now EV. Next, like in the new future, we're going to have cameras on the e-box. What happens was when surveillance becomes so convenient, like because that's how it usually arrives, like not as something scary, but portrayed as something useful, as frictionless, let AI do the work, because like all you have to do at home is to wear this earbuds, and then the camera would capture the footage, capture the videos of your fridge, and suggest a recipe you could cook. Like it sounds like a very assisting and very friendly. And then slowly your homes become sensor networks as well. Like this isn't about Apple specifically. Like it's a much bigger trend. Like the AI era wants data, and the closer the devices to your daily life, the more valuable the data becomes. And it's not just me. Like if we scroll down to the comments, the reaction towards this like Apple's earbuds here, like translation basically more surveillance to spy on you and in your own homes. And then there's another one that I really like. So literally no one asked for it, but like Apple still built it anyway. So it seems to be a trend, like from all the tech companies, because they do need more data to feed into AI. So the final question we are asking here, can we stop this? Like, I honestly, I don't know, but like regulation needs to take the first step. Like, we need to have a cap for control, like mass cap, like how much can AI do for us? How much data can AI companies or tech companies get our data? We need to set the rules. And of course, we'll be keep watching this very closely. Though, ironically speaking, it might already be watching us first. All right, so let me know if you guys, what you think of these earbuds, or is inevitable that is like maybe just a trend we have to enter in the next phase. All right, so let's hop on to the second story of the day. So we have to talk about Taiwan. So Taiwan just overtook India in the stock market rankings, and the AI seems to be the reason. This is a fascinating story because on paper, India should be so much bigger, so much more valuable. But right now, global money is choosing Taiwan instead. And one simple answer is, of course, AI. So Taiwan has officially overtaken India to become the world's fifth largest stock market. So Taiwan right now, Taiwan total stock market value now sit around $4.9 trillion. As of India is around 4.9 is around like so Taiwan's $4.95 trillion and India is around $4.92 trillion. It's close enough, but Taiwan is now ahead, and that is a major shift because India has long been seen as one of the biggest long-term growth stories in the world. India has the biggest population, like very fast-growing economy, massive consumer market. So how does a much smaller economy jump ahead, right? Turns out it's just like one company when it comes to Taiwan, so being TSMC, of course. So Taiwan Semiconductor Manufacturing Company. This is basically the factory behind the AI boom. So if NVIDIA designs the brains, designs the chips, TSMC would build for them. And right now, everyone wants AI chips. Like data centers need them, cloud companies need them, and AI startups, of course, need them as well. Big tech is spending billions chasing them. That money is flowing directly into semiconductor stocks, and Taiwan sits right at the center of this. So we follow the money, like this is where global capital is going. Investors are asking, like, where is the AI infrastructure? Where are the chip makers? Who powers the next generation of computing? And the answer keeps pointing towards Taiwan. So here we have another graph, another chart here. So Taiwan being the green line at the top. As you can see, strong growth. And this is only year to date, literally just like 2026 year to date. And that has pushed Taiwanese stocks sharply higher this year, not because Taiwan suddenly became a bigger economy, but because it became one of the most important AI supply chains hubs in the world. And if we take a look at India, like what about India? For India, it's like the story looks very different. So Indian stocks have struggled. Earnings growth has slowed. Foreign investors have been pulling money out. And importantly, India doesn't have the same AI hardware exposure. India has strong software talent. We know that for sure, like services, digital business. But this current market cycle, this cycle is being driven by physical AI infrastructure. So we're talking about AI chips, servers, power, data centers. That's where the exact excitement is. And India is less exposed to that, like that part of the business. And here's the craziest part, like Taiwan's entire economy is still way smaller than India's. India's GDP is about $4 trillion, while Taiwan is under $1 trillion. So the stock market isn't reflecting economic size. what it does is that it's reflecting strategic importance that tells you something huge about this market. And this is a major lesson for investors as well. Stock markets are not always about GDP. They are about where the future profits are expected to come from. Right now, AI is the dominant story, and Taiwan owns one of the most important checkpoints in that story, which is the semiconductor supply. And if AI demand keeps exploding, Taiwan would keep winning in this day and age. But of course, there's still risk because concentration cuts both ways. If AI spending slows, if chip demand weakens, and we are talking about Taiwan at the end of the day. So if geopolitical tensions with China rise, Taiwan becomes very vulnerable very, very quickly because so much of that valuation depends on one giant global theme. But the final take, though, like Taiwan overtaking India, is not just a marketing ranking story. It's actually a signal. Global capital is chasing AI infrastructure, not just economic growth, not just population size, but the AI boom is reshaping the global financial map in real time. And right now, Taiwan is one of the biggest winners. Let me know if any of the viewers own any of the Taiwanese stocks, being TSMC, the biggest winner right now. But anyways, we are taking a short break from now. When we come back, we are diving into more AI story, and this time we focus on China because China might be controlling its AI talent from ever leaving the country. So that is interesting, like about freedom of the AI talents as well. So do stay with us after the break. We're going to give you more information.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. We're now looking at some latest AI story developing in China. So China might now be controlling its AI talent like national security assets. And this is a very important story because the AI race is no longer just about who has the best chatbot or who has the best chips. Right now, it might be about controlling the people building the technology. China is tightening restrictions on overseas travel for top AI workers, and that tells you something big. Beijing now sees AI talents as a strategic and national asset. So, according to Reuters, like some AI professionals working at major Chinese firms, including companies like Alibaba and DeepSeek, might now need government approval before traveling overseas. So if we let that sink in, They are not military officers. They are not defense scientists. We are talking about AI engineers. And that is a major shift because it suggests China now sees advanced AI talent as something too important to move freely. So timing wise is interesting, like because the AI race between the US and China is just getting more intense. The US has already tried to slow China down, whether it's export controls, restrictions on advanced NVIDIA AI chips, limits on AI infrastructure access. But despite all of that, China has still been moving very fast, and that has surprised a lot of people. One classic example I would give is, of course, DeepSeek, because suddenly people started asking, like, wait, is China catching up faster than expected? Even with sanctions, even with limited chip access, that create real concern in Silicon Valley and likely real concern in Washington as well. And as for the talent league, like if we flip that around, if China believes its AI engineers are becoming globally valuable, the next fear becomes what if these talent leave China? What if competitors recruit them? What if sensitive research leaks out? And that's likely what Beijing is worried about because talent is just as important as hardware, maybe even more if you ask me. And this is what makes the story even bigger. Like those restriction reports reportedly are not just for state research labs. They might also affect private tech companies, and that matters because it means Beijing no longer sees AI as just some commercial business. It sees as a national infrastructure, some strategic technology, almost like chips or maybe even defense systems, and that is a huge mindset shift. And this is a clearer sign yet that AI is becoming a geopolitical arms race. Because think about it. The US restricts chips. China restricts talent movement. Both sides are trying to protect strategic advantages. This starts to look less like tech competition and more like Cold War behavior, except this time the battleground is AI. And we know that whoever leads AI could shape the next decade of global power. And that's why it matters. And that's why we are adding an AI segment every single day on our Roxom TV show as well. So now here we do want to shift to another interesting story we cannot ignore for the day. I'm talking about Ferrari because Ferrari just launched its first EV electric car and investors hit the sell button. If we take a look at the stock price of Ferrari, it literally fell off the cliff and we are looking at the past 5 days performance. So let's talk about Ferrari because Ferrari has officially just entered the EV sector, and the market's first reaction is is not like hatred, but definitely not applause. Like we could tell from the stock, it dropped like 6%, and that's pretty sharp move for a luxury giant like Ferrari. So what happened is that here we have a clip of what it looks like for the EV. This is called the Ferrari Luce. Luce means light in Italian, and this is a historic moment because this is not just another Ferrari. This is a list of firsts. So the first fully electric Ferrari, the first Ferrari with four doors, the first Ferrari with 5 seats, and maybe most shocking, the first Ferrari that doesn't wake the neighbor with that iconic engine roar. And that alone triggers some Ferrari purists. Now, on paper, like this thing is serious. So, 4 electric motors, over 1,000 horsepower, 0 to 100 kilometers, so km per hour in just 2.5 seconds, more than 500 kilometers of range, and the starting price is actually 550,000 euros. That's roughly 640,000 US dollars. So yes, that is still very much Ferrari. So why did the stock drop so much? Analysts point out to three reasons why it did. So first is the brand identity. So we are talking about Ferrari at the end of the day. Like Ferrari isn't just selling transportation. Ferrari, what it does is that it sells emotion, it sells sound, it sells drama. That engine scream is part of the product. Like take that away, and some investors worry you might dilute the brand. And because let's be honest, half the Ferrari experience is hearing it before you even see it. Like electric cars, EV changes all of that. Like of course, people are not going to like it. Second is when it comes to the cost. So building EV platforms is expensive. There will be new batteries, there'll be new engineering, new software, and Ferrari has some of the best margins in the car industry. Investors might be asking right now, like, will EV development eat into those profits? And that is a fair concern. That reason is actually timing. So it's a very classic buy the rumor, sell the news event. The stock has already rallied ahead of the launch and big expectation, big hype. Then when the event actually happened, traders would likely take profits. So this is a very classic scenario and it happens all the time. But the internet had a fourth reason, and honestly speaking, this might be the most emotional one. Some people think EV is simply not sexy. Like, because when you picture Ferrari, so this is a meme that I found on the internet. It basically summarized the whole thing, why people are so upset and so frustrated by Ferrari EV. So on the top, you have the classic Ferrari, like a classic red color, red machine. It is really loud, it's very sexy, aggressive, flashy. This is a symbol of success when you own a classic Ferrari. That is the emotional image is so powerful. And if we take a look at the EV Ferrari at the bottom, so this guy explained everything. Like this is a really good meme picture that summarized the whole thing. So for some fans, it just doesn't hit the same. And I kind of understand, even though I'm not a guy. And Ferrari knows this for sure. Like Ferrari's CEO has already addressed this. So he basically said nobody will be forced to buy the EV to stay in Ferrari's good books. That matters because Ferrari has a very exclusive system. If you want access to the very rare hypercars, you usually need to already own the other Ferraris first. So it's like a VIP ladder. But Ferrari says the EV won't be mandatory. So that tells you even Ferrari knows some buyers might resist. But the bigger shift here is that Ferrari has quietly scaled back on the whole EV ambition. Fully electric cars are now expected to make up only 20% of the lineup by 2030. That used to be 40, so that is a major car. And that tells you demand might not be as clear as expected. But here's my question. Like, even for the EV, who exactly is this for? Because the argument is this, like maybe younger buyers will love it, but like maybe a new generation wants electric luxury. Like, okay, that is a fair argument, but like think about it. How many young people can actually afford a $640,000 Ferrari? That's not exactly Gen Z budget shopping. So Ferrari is trying to balance two worlds. Like on one hand, there's like the feature technology without losing the soul of the brand. That's not easy because if you move too fast, you alienate your loyal fans, and if you move too slow, you risk looking outdated. So let me know your thoughts about this EV Ferrari. Does it feel like Ferrari, or as long as as it's EV, you're gonna like it? Because like the gas price is so high right now. Let me know in the comment section below, and we can start a discussion. All right, so moving on to another really weird story we have to cover, and this story it goes deeper into internet rabbit hole territory. So here we have a new claim going viral, and it says the CIA might be secretly using consumer DNA database So yes, like we're talking about things like 23andMe or Ancestry DNA to search for possible alien-human hybrids. So like for those of you just to understand what it means, like there are 4 types of possible aliens released by the US government. So here is what they might look like. And the alien human hybrid is, of course, like this one. That sounds very completely insane, I know, but let's break it down where this story is coming from. So, what happened is that there is some claim coming from author and philosopher, so Jason Jajani, and he recently appeared on the American Academy podcast. So during the interview, he reported stories linked to Lynn Buchanan, a former U.S. Army intelligence figure who has involved in so-called remote viewing programs. Basically, military experiments where people claim they could gather intelligence using psychic abilities. And according to the story, the CIA is supposedly interested in identifying a race of being called Nordics. So here are the Nordics. Where's the picture here? So Nordics. So these beings are likely look almost like human. They're very tall, blonde hair, blue eyes, and the theory says they might have lived among humans for generations. Again, like this is internet UFO myth, like not confirmed science, not verified intelligence, just to be crystal clear. So we have to do a reality check. There is zero public evidence that the CIA is accessing DNA companies to search for alien hybrids. There's no proof, no official confirmation, and companies like 23andMe and Ancestry have not confirmed anything like that. So right now, this is a claim, not a verified fact. And that distinction matters quite a lot. So, why is this story spreading though? That is the next question that I want to ask. Well, the timing wise is interesting because this comes as UFO interest is heating up again. So, the Pentagon has released more declassified material. So, being the military footage, reports of very strange metallic spheres, unknown objects near sensitive military areas, and that part is real. Like there are actual military reports of unexplained aerial objects, but unexplained doesn't automatically mean aliens. That's where people often make a huge leap. Then comes the whistleblowers. Like this is where things get even stranger. So some former Pentagon-linked figures have discussed theories about multiple large non-human species. So, including, let's go back to pictures. So, all these aliens. So, some greys, insect-like beings, and so-called Nordics. But again, like none of that has been officially verified. No public proof. No confirmed biological evidence, no government confirmation of alien species. Like this is where you need to separate facts from speculation. Like that are facts. So the fact number 1 is that the military has recorded objects it cannot easily explain. Fact number 2 is that governments have declassified some UFO related files. But when it comes to speculation, like speculation number 1 is like alien DNA tracking program. So if we go back to this news, like CIA is using some information, or they're tracking Nordic hybrids, or specifically using the DNA databases from 23andMe. That is a very different category because let's be honest, intelligence agencies absolutely have a long history of misinformation campaigns like psychological operations or Cold War deception. So that was like pretty common in human history. So when wild stories appear, you always have to ask, is this disclosure or it's just more like a distraction? Because right now we have a mix of real military UFO reports, we have former insider claims, internet myth, and a lot of speculation. So speculation like this. So if you go to X or Reddit, it's just another rabbit hole. about this, basically this conspiracy theory. So there's some whistleblowers here. So New York Post put that on X. So like CIA used data set just for search for some aliens. And here we have another basically influencer talking about this, like what if the COVID vaccine was an anti-alien hybrid targeting system and the swapping was to collect DNA to find out who was actually part alien. I'm not going to comment on that, whether I do think it's true or not. But like if you go on X and type stuff like that, you're going to see a lot of speculation, though this has not been scientifically confirmed yet. So it's not verified truth. But until like actual evidence appear, this remains one of the internet strangest rabbit holes. Still, you have to admit, like it makes one hell of a story for sure. And that's certainly an interesting one to cover on Roxom TV. But anyways, after so much speculation, after so much conspiracy theories, let's take a short break. And when we come back, we are diving into the Bitcoin world and also into the crypto world. And this weekend is interesting because Michael Saylor did not buy Bitcoin this time. But however, I do think it's still a bullish time ahead. So do stay with us after the break. We're going to give you more information.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. We now have a sad story from the crypto world today. So, the crypto industry has lost one of its brightest young builders. So, Nathan Allman, the founder and CEO of Ondo Finance, has passed away unexpectedly at just 32 years old. This news has sent shockwaves across both crypto and TradFi because Nathan wasn't just another founder. He was one of the key people helping bring Wall Street onto blockchain. So what happened is that we have the official statement, the public statement from the Ondo Finance team. The company said it was devastated by Nathan's sudden passing. They describe him as brilliant, humble, and deeply driven. As of now, no official cause of death has been publicly shared, and honestly, 32 years old is incredibly young, so a real tragedy. So, just to basically give you quick context for viewers who might not know him, Nathan was one of the major names in RWA, so real world asset tokenization space. Before founding Ondo, he worked at Goldman Sachs in digital asset, very strong TradFi background. Then in 2021, he made the jump into crypto and built Ondo Finance, and then he moved really fast. And Ondo right now has become one of the biggest largest products trying to connect TradFi with blockchain. The idea here is simple, which is to take TradFi products like US Treasuries, like money market products, eventually even stocks, and bring them on-chain, make them programmable and faster and more accessible. So there are products like USDY, which is a yield-bearing tokenized dollars, or OUSG, which is a tokenized US Treasury exposure. And more recently, big pushes into tokenized stocks market. Ondo became one of the most serious names in the entire RWA narrative, and Nathan was a huge reason why. And if we zoom out, RWA is one of the biggest themes in crypto right now because for years, crypto focused mostly on native digital assets. So whether it's Ethereum or altcoins, or some would classify Bitcoin as crypto. But now the conversation is shifting toward bringing trillions of dollars of TradFi, so traditional assets, onto blockchain rails. So whether it's treasuries or bonds or stocks, that bridge between like old finance and new finance, Nathan here, he actually helped that a lot. So question a lot of people are wondering, especially Ondo, a few investors of Ondo. So the company said that leadership transition is already in place. So Ian, who was already serving as president, will now become the CEO. Ondo said he has already been deeply involved in operation, in product strategy and execution for more than 2 years. So from a business continuity perspective, the company has said operations will continue, but emotionally, losing a founder like this, it is huge. So Nathan Allman was part of a generation of builders trying to reshape financial infrastructure, from Goldman Sachs to crypto founder to helping push tokenized finance into mainstream. That is a meaningful legacy for someone only 32 years old. And this is bigger than market. It's simply a moment to recognize someone who helped move this industry forward. And our thoughts are with his family, friends, and also with the Ondo team. All right, so moving on to the next story of today, we have to talk about Michael Saylor. So Michael Saylor this time, he did not buy Bitcoin, and that might actually be more important. So over the weekend, Michael Saylor dropped one of his usual cryptic tweets. He posted like, "This week we bought bonds, not Bitcoin." So very classic Michael Saylor. Like everyone immediately started asking, wait, like why isn't Michael Saylor buying any Bitcoin? Is Michael's strategy slowing down? Has the biggest Bitcoin buyer in the world finally hit pause? Well, today we got answer, and actually this might be a bullish move. So what just happened is that MicroStrategy confirmed it completed a massive $1.5 billion debt repurchase program. What does that mean in simple wording? So instead of using capital to buy more Bitcoin this week, the company used that money to buy back convertible debt, basically cleaning up part of this balance sheet. So reduce financial obligations, strengthen the company before the next move, and importantly, they did not sell any Bitcoin, not even a single coin. Michael Saylor, or MicroStrategy rather, still own a massive 843,000 BTC. That's still by far the largest corporate Bitcoin treasury on earth. And if we take a look at the metrics that they're giving out, it is suggests something very interesting. Strategy also reported something called the Bitcoin yield here. And if we take a look, year to date is 13.3%. Now, what is this, right? Like this is one of MicroStrategy's favorite internal metrics. What it does is that it measures how much Bitcoin ownership grows relative to total shares outstanding. In more simple version is that are shareholders getting more Bitcoin exposure over time? So like so far this year, the answer is obviously yes. A lot of people think MicroStrategy just like blindly buy Bitcoin, but that is not entirely true. Like this is financial engineering, and it's more about balance sheet management. Michael Saylor is building a machine. Sometimes that machine is buy Bitcoin. Sometimes it strengthens itself so it can buy more on a later stage. And that's what this looks like. The Bitcoin vacuum is still charging, exactly like Michael Saylor said. But speaking of which, about this like Bitcoin financial product, yield-bearing product, that is another competitor entering the field. MicroStrategy is no longer alone. So another Bitcoin treasury company is moving aggressively. So being Strive, so Strive Asset Management, SATA, we talk about that extensively. There was a deeper breakdown in one of our episodes, and make sure to watch that if you're interested. So SATA, they're moving very fast. This morning, Stripe announced it bought another so basically 1,100 BTC worth around $85 million. Average purchase price is just under $77,000 per Bitcoin. That now brings the total stash to 16,500 BTC. Still very tiny compared to MicroStrategy, but the strategy that they're using is what matters. So Strive, what they're doing is like copying the playbook, but faster. So Strive said its Bitcoin yield, so if we take a look at the Bitcoin yield, is even more insane. It's 23.4% year to date. If we compare that to MicroStrategy, so BTC yield is only 13.3%. I don't know why I used the word only, but like still very insane. But like SATA, in other words speaking, is even more insane. So they also mentioned something called an amplification ratio of 45.2%. This sounds very complicated, but bear with me. The simple version, what it means is that they are using capital markets tools to increase Bitcoin exposure faster than just buying spot Bitcoin normally. So it's the exact same game, just different version and more aggressive compared to Michael Saylor. And here's where the real innovation. So, because you could be asking, like, Jamie, like Strive is just a copycat of Michael Saylor. Well, that is a little bit innovation, a little bit, not gonna lie. So, all right, so both strategy and Strive are now building products aimed at traditional income investors. What it means is that people will normally stick to very safe investment, some fixed income generation, dividend products. They might just buy bonds, not necessarily Bitcoin. So MicroStrategy, of course, they have STLC, Strive, they have SATA, and starting on 16th of June, Strive said SATA will become the first US listed security ever to pay daily cash dividends. So not monthly, not quarterly, but daily. And this is I would say, a smart pitch because traditional investors love predictable cash flow. Now, Bitcoin treasury companies are packaging Bitcoin exposure in a format TradFi understands. So the bigger picture here is this is an evolution we are witnessing. Like it's an evolution of Bitcoin corporate gain. Like the story used to be who buys the most Bitcoin. Now the real question is who builds the most powerful capital machine? Because if you can attract cheap capital, you can keep buying more Bitcoin again and again. That creates a supply squeeze because these companies, they are not trading Bitcoin. They are accumulating it. They are locking it away and reducing available supply while demand keeps growing. And that's the game. And that's when the supply squeeze gets really interesting. So short-term wise, as we were looking at TA, like there is still some volatility for sure, maybe in the coming months, but long-term wise, you know, I'm an ultimate Bitcoin bull forever. All right, so like before we end the segment, there is some conceptual theory that I feel like we have to get that clear, just so we can understand the macroeconomy a little bit better. Because like there's this very commonly asked questions like, why does it feel like the rich keeps getting richer, and even when everyone else is working so hard? Like think about it. Maybe you work 2 jobs or 3 jobs right now just to make ends meet, but like you're not feeling any richer. So let's talk about this concept that nobody learns in school. But once you understand it, like the whole economy starts to make a lot more sense. So this concept we have to talk about is the Cantillon Effect. It may explain why so many people feel like they are running faster but somehow getting nowhere. So what is this effect? So Cantillon effect. So this idea comes from a economist named Richard Cantillon all the way back in the 1700s. And his observations are quite simple. Like when new money enters the economy, it does not reach everyone equally, and it definitely does not arrive at the same time. The people who get access first, they would get the benefit the most. The people who get last, get the liquidity last, usually they are the loser in the market. And that is the whole idea. Very simple, but incredibly powerful and incredibly important to understand. Now, how does this work in the modern days, right? So in modern system, new money usually enters through central banks. So we're talking about like maybe Federal Reserve, the banking system, large financial institutions. That means fresh liquidity doesn't land in your wallet first. Where it goes first is they will enter big banks, they will enter corporations, government spending, financial markets, asset owners. And what happens next is that stocks would go up, real estate would go up, and asset price move first. Then later, consumer prices rise, food gets more expensive, rent goes up, insurance costs more, and wages, those usually move last, often after your purchasing power has already dropped. And that's why people feel poorer, even if the salary technically rises a little bit. So that's why people feel stuck. This actually explains a lot of modern frustration because over the past decades, productivity has gone way up. Like technology improved, efficiency improved, workers became more productive, but real wage growth, it was much weaker. Like the productivity gains were real, the wage gains were almost like an illusion. So what changed? Why is like the daily citizens of the United States feel the life is so much more difficult compared to before? Like they are working harder, but not necessarily richer. So this again points back to 1971. That's when the president ended the dollar's link to gold. That was a huge turning point because after that, money became much easier to expend. There is more debt in the system, more credit, more liquidity, and with that, it came like massive asset inflation. If you already own assets, like you likely benefit quite a lot. If you depended only on salaries or only on wages, it became much harder for your day-to-day lives. So this leads to very uncomfortable truth. Rich people usually get richer just by earning, like they don't just like get richer just by earning salary. They get richer by owning assets, like things that rise when money gets weaker. Because if the dollar keeps losing purchasing power, owning appreciating assets becomes the winning strategy. Definitely not holding cash, not holding any fiat currencies, I would say. And this is exactly why Bitcoin enters the conversation because Bitcoin is different. Like there will only be 21 Bitcoins will ever exist in this world. No central bank can print more. No politician can create extra supply. That makes Bitcoin fundamentally scarce. And for many investors, that scarcity is the point. Not because the system is changing, but because understanding the system changes how you survive it. Now, to be fair, like this effect, so Cantillon Effect, is a framework, so it's not a conspiracy theory, but it helps explain why the modern economy feels so unequal, why asset owners seem to win first, why young people struggle to buy homes, and why simple saving cash feels like it's losing power. So, final summary: if you have an orange pill, your friends or your family or anyone you care about, make sure you try your best, because that's what I'm doing on a daily basis as well. We do need to spread out the word so that more people would enter Bitcoin. All right, so that's pretty much mark my end of today's segment. So before you go, make sure to follow us on X. So my X is gemcrypto_io. Make sure to give me a follow. Make sure to follow Roxom TV as well, because we have regular news coming out on an hourly basis. We talk about like global news, AI news, and we have different guests joining the interview, joining the channel. Here we have the Wolf of Wall Street being one of the biggest voices in the space as well. So point being, there is so much valuable content that you probably do not want to miss. So make sure to give us a follow on Roxom TV and also on YouTube as well. As always, I'm live here Monday through Friday starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded version is also available on both channels. So the Gem Crypto YouTube channel and also Roxom TV YouTube channel. Thank you guys for watching. I hope you guys have a fantastic day and see you guys in tomorrow's show.